Here we go again. Tesla reported earnings after the bell on Tuesday and the shares are ripping higher almost 7% after hours, after being almost 5% up during the regular trading session on Tuesday. What's going on, investors? Hopefully guys are doing well out there. In this video we'll find out the real reason why the shares of Tesla are ripping after reporting earnings. We will go through the earnings update and see the numbers which Tesla reported, and the spoiler alert, the numbers are terrible. You could not imagine the worst quarter reported by Tesla. Finally, we will see the estimates from analysts and the future they are drawing for Tesla as a company. Let's immediately start, and if you can see that the share started to rip around 17 o'clock after hours, and the reason why, I think the main reason why, it has nothing to do with the business fundamentals of the company, is because the news was breaking that Trump now is saying tariffs on China are going to come down. China will be really happy. We're going to work together very well. No real explanation of why and what we got in return, just that it's going to come down and that won't be zero. That's the news broke, and after that the whole market ripped higher. QQQ was up almost 2% after hours just after this news, and there was another news coming later, reports that Trump will meet China's Xi Jinping in May. The most uncertainty was because of the tariffs on China is too large, and investors could not even understand, like, is this negotiating tactics or this is in reality we're going to live with 245% on China. And now we can see that President Trump is blinking probably already second time, so I'm not sure who he is negotiating with. Seems like negotiating with himself. But anyhow, let's go through the earnings to see the highlights of earnings release for Tesla in Q1 2025. As I mentioned, it has been absolutely disaster across the board. Total automotive revenue minus 20% year over year. One of the bright spots of Tesla earnings report is energy generation and storage revenue. It continues to go up, and in this quarter it's up 67% year over year. For services, also up 15%. For the total revenue, minus 9%, gross profit minus 15%, and total GAAP gross margin minus 104 basis points. Absolutely disaster. Meanwhile, operating expenses grew, so the revenue dropped. Meanwhile, operating expenses grew. You could not imagine the worst situation in the world. Income from operation down 66%, operating margin down 343 basis points. Absolute disaster. Free cash flow is up 126%, but if you can see from the perspective of quarter over quarter, we were printing almost $3 billion in Q3 of 2024, $2 billion in Q4 of 2024, and now just $600 million in free cash flow. I could remind you that Tesla is $750 billion company, so $600 million in free cash flow is absolutely a joke for the company. Here we can see the highlights of automotive business, and you can see that Tesla was nicely growing from 2019 to 2023, but currently we see some kind of plateau or even downtrend. This is not very nice to see. Visualization of automotive business of Tesla. Until 2023 the business was nicely growing, and we peaked in late 2023, and now the business is declining, and you can see in the growth perspective we are well under zero, which means that the business is going down, and this is definitely need to turn around. As I mentioned, one of the best things from Tesla's report is energy generation and storage segment, which continues to go up both top and bottom line, and here everything is very nice and scaling is happening extremely rapidly. Similar picture for services. The revenue is growing, gross profit is growing. Meanwhile, the revenue growth is actually decelerating. So we need to produce more vehicles so that the services will continue to fuel after we have more cars on the road. Picture about gross margin is total disaster. In 2021-2022, the gross margin was 25%, but currently gross margin dropped to 17%. And of course, it was due to the increase in the rates, and Tesla is the cyclical company. If the cost of the credit increasing, people could not afford to buy expensive cars like Tesla. And now we'll go through the earnings call highlights to see what Elon Musk told to investors, so that Tesla is ripping 7% in the pre-market. Elon Musk started commenting about his activity in Dodge, and he said, quote, "I don't think there is a large slug of work, and the work is mostly done. I think starting probably next month, May, my time allocation to Dodge will drop significantly." And this news, of course, is very nice, even though I don't think it's changing fundamentally some story about the Tesla. Of course, it's nice to have more time of Elon Musk focusing on the company, but I don't really think it will be changing much. Elon Musk continues to emphasize that Tesla is not automotive company. The future of companies fundamentally based on large-scale autonomous cars and large-scale, large-volume, vast numbers of autonomous humanoid robots. I continue to believe that Tesla with excellent execution will be the most valuable company in the world by far. But that's an important if. We must execute well. But if we do execute well, I think Tesla will be the most valuable company in the world by far. It may be as valuable as the next 5 companies combined. Different people think about Tesla differently, but currently it's still mostly a car company, even though based on the valuation of $750 billion, the large money is actually valuing Tesla as AI and software company. Elon Musk asked about the tariffs, and he said, quote, "I've been on the record many times saying that I believe lower tariffs are generally a good idea for prosperity, but this decision is fundamentally up to the elected representative of the people, being the President of the United States. So, I'll continue advocate for lower tariffs rather than higher tariffs, but that's all I can do." So Elon emphasizing that he is one of the advisors for the President of the United States, but not all the decisions is up to him. What he can do is just give suggestions, but finally it's totally up to Trump to listen or not. There was a question about Optimus. Elon is replying, "With regards to Optimus, we are making good progress in Optimus. We expect to have thousands of Optimus robots working in Tesla factories by the end of this year. So by 2030, I feel confident in predicting 1,000,000 Optimus units per year. It might be 2029. I would not be as confident as Elon. He usually promised, but under delivers. I mean, in the end, he will deliver, but from the timeline perspective, he usually a little bit more optimistic than he should be. So I would not see million Optimus printed in 2029, but if this is the case, I mean, Tesla is going significantly higher from here. Questions about the robotaxis. Do you have a sense on how many cars or how big the scale will be initially and how that might ramp up? Elon is replying, "We are still debating on exact number to start off on day one, but it's like, I don't know, maybe 10 or 20 vehicles on day one, and watch it carefully. They scale it up rapidly after that." So he's saying that probably they will start from extremely small scale, 10 vehicles probably, and then if everything is good, if there is no accident and stuff and regulatory environment is positive, then it will be able to scale very, very fast to thousands or hundreds of thousands of vehicles in the future. The question is about expansion into India. The answer, I mean, we've been working on getting into India. India is very hard market, and especially the current, and I don't want to talk only about tariffs, but the current tariff structure with India is that any car which we send in is subject to 70% tariff. Also like a 30% luxury tax on it. So the same car which we are selling is like 100% more expensive than what it is. So Elon is emphasizing that tariffs is actually quite a large headwind currently for the company, especially for the energy business, for automotive business, not as big headwind because most of the cars are actually done in United States of America. Now, why the stock is up after these disastrous earnings, after the disastrous numbers, and where do I see Tesla's going from here? So I believe the main reason why stock is up, why whole market is up, is because of this tweet which broke yesterday after hours. Now let's see the analyst estimates for the Tesla, and currently we can see that from 2025 to 2030, analysts already expect Tesla to triple the revenue. So if you can see, from 2025 we are expected to print $100 billion in revenue, and in 2030 it's almost $300 billion. Even though we do not have robots yet, we do not have FSD and all those good stuff, but currently it's already kind of priced in. Otherwise Tesla would not be worth $750 billion in this market. Currently I have position in Tesla. I'm invested in Tesla because I believe this is one of the best opportunity to capitalize on robotics, and for me Tesla and Amazon, two robotics plays. Amazon, in terms of it has huge revenue, and I believe that robotics in the retail warehouses and fulfillment will expand margin significantly. And for Tesla, I see the humanoid robots in the factories increase productivity and efficiency and also optimize cost. But finally Tesla will be selling these humanoids to normal people like you and me, and I believe this is one of the best opportunities in the market. Is Tesla cheap here? No. Is this earnings report good? Absolutely not. Am I buying Tesla at these prices? No, because I believe that currently in the market there are better opportunities than Tesla. I hope you enjoyed the video. If you did, consider subscribing to the channel. On my channel I do fundamental analysis, I run public portfolio, I do educational videos. If any of that interests you, welcome to join. Thank you so much, friend, for stopping by. I will see you in the next one.